CrowdStrike just delivered one of the best quarters in company history. Net new annual recurring revenue hit a record $265 million, accelerating to 73% year-over-year growth. This is the same company that faced a massive outage just months ago. Here's how they turned it around. In today's video, we're analyzing CrowdStrike's results for the third quarter of fiscal year 2026, which ended October 31st, 2025. We'll examine four key areas. First, the financial results, revenue growth and profitability trends. Second, what's driving the business, from the falcon-flex subscription model to strategic partnerships. Third, cash generation and balance sheet strength. And fourth, management's outlook and what it means for the company's future. Let's dive in. Revenue growth is accelerating. That's rare in enterprise software right now. So what's driving it? Total revenue reached $1.23 billion in the quarter. That's 22% growth compared to last year. Subscription revenue, which makes up the vast majority of the business, grew 21% to about $1.17 billion. But here's the more important metric: annual recurring revenue, or ARR. This measures the annualized value of customer contracts. Ending ARR hit $4.92 billion, up 23% year-over-year. Two things are driving this acceleration. First, the falcon-flex subscription model. This flexible buying program has now generated over $1.35 billion in ending ARR, growing over 200% year-over-year. It's helping customers consolidate multiple security tools onto CrowdStrike's platform. Second, customers are adopting more modules. 49% of customers now use 6 or more modules, 34% use 7 or more, and 24% use 8 or more. Fast revenue growth is great. But is CrowdStrike actually making money? Let's look at the profitability picture. On a GAAP basis, CrowdStrike reported a net loss of $34 million, or 14 cents per share. That's slightly worse than last year's $17 million loss. But here's the thing. GAAP results include significant non-cash charges. The company incurred $93 million in stock-based compensation this quarter alone. There were also costs related to the July 19th outage incident, about $26 million. When we adjust for these items, the picture looks very different. Operating margins tell an important story. On a GAAP basis, the company posted a loss from operations of $69 million. That translates to a negative 6% operating margin. But on a non-GAAP basis, which excludes stock compensation and one-time items, operating income reached $265 million. That's a 21% operating margin, up from 20% last year. This shows the underlying business is becoming more profitable as it scales. Subscription gross margins held. We need to talk about the elephant in the room. The July 19th outage. How much is it still costing the company? The July 19th, 2024 incident involved a faulty content update that caused Windows system crashes for some customers. This quarter, CrowdStrike incurred about $26 million in related costs, down from $34 million in the prior quarter. Year-to-date total costs have reached $102 million. These include legal fees, remediation costs, and sensor testing. The good news? These costs are declining each quarter. More importantly, the company's growth metrics suggest the profitability on paper is one thing. But is CrowdStrike actually generating cash? Let's look at the cash flow statement. CrowdStrike delivered record operating cash flow of $398 million this quarter, up from $326 million last year. That's a 22% increase. Free cash flow, which subtracts capital expenditures, reached $296 million, also a quarterly record. That's up from $231 million in the same period last year. Free cash flow margin came in at 24% of revenue. Year-to-date, the company has generated over $859 million in free cash flow. This strong cash CrowdStrike isn't just growing organically, they're forming major partnerships with tech giants. Here's what matters. Several major partnerships were announced this quarter. Amazon Web Services selected CrowdStrike as the first cybersecurity partner to deliver an integrated CM through AWS Marketplace. CrowdStrike also won AWS Global Marketplace Partner of the Year and Global Security Partner of the Year awards. The company partnered with CoreWeave to power secure AI cloud infrastructure, and they're collaborating with NVIDIA to bring AI-powered security agents to edge computing environments. On the customer side, major wins include CrowdStrike announced several new products during the quarter at their FAL.con conferences. These include Falcon Next Gen Identity Security, Falcon Data Protection, and Falcon for IT. They also unveiled Threat AI, described as the industry's first agentic threat intelligence system. The company acquired Pangea, a leader in AI security, to strengthen their capabilities. And Charlotte AI, their AI-powered security assistant, achieved FedRAMP high authorization, opening doors to federal government contracts. So what does management expect for the rest of the year and beyond? Let's look at the guidance. For the fourth quarter, CrowdStrike expects revenue between $1.29 and $1.3 billion. For the full fiscal year 2026, they raised guidance to $4.8 billion at the midpoint. Non-GAAP operating income guidance was also raised to over $1 billion for the full year. That implies about a 22% operating margin. Here's what's particularly bullish. Management increased their second-half net new ARR growth expectations to at least 50%. Let's summarize the key points. First, CrowdStrike delivered a strong quarter with accelerating growth. Revenue grew 22% and ARR grew 23%. Net new ARR of $265 million was a quarterly record. Second, the falcon-flex subscription model is driving customer consolidation. Over $1.35 billion in ARR now comes from falcon-flex, growing over 200% year-over-year. Third, profitability is improving. Non-GAAP. That wraps up our analysis of CrowdStrike's third quarter results. If you found this breakdown helpful, please hit the subscribe button and turn on notifications so you don't miss future videos. I want to remind you that this material is for educational purposes only and does not constitute investment advice. Investing in stocks carries the risk of capital loss. Always consult with a qualified financial advisor before making any investment decisions. Thanks for watching, and I'll see you in the next one.